This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello everyone, and very much welcome to another Breaking Banks Europe. We're here at the takeover at Money2020 Europe in Amsterdam, and I'm really happy to be speaking to you today together with a very distinguished guest, Stani Kulechov. Stani, very much welcome.
Thank you for having me here.
Yeah, great to be here on the show. You just flew in here, right, from London, I believe. So it was a bit of a rush, but how was traffic for you?
Really good, just made on time, so pretty good.
Wonderful that you made it.
Yeah.
I'm really happy that we can talk a little bit about today the crossovers between crypto world and the real world, where I think a lot of exciting stuff is happening at the moment. But first of all, let's make sure that people understand who you are. So can you tell me a little bit about what you're working on these days?
Yeah, so mostly I'm known, or our company Avara, that is part of like a bigger company of Avara, is known for building decentralized finance and being a major contributor. So we built the Avara protocol, which is effectively a lending and borrowing protocol on the blockchain, mainly on Ethereum and a few other ones. And that has roughly 43 billion worth of net deposits at the moment. So you put cryptographic assets as a collateral and you borrow stable coins. And now we're expanding to actually also include real world assets. So these are more traditional assets that exist in real world. For example, equities, private debt, and private equity as an example, and tokenizing that onto the blockchain and then using that as a collateral and borrowing stable coins against. And we make this possible for the users.
Wow, exciting times. So do you see that you mostly focus on illiquid assets that you want to make liquid? Is that mostly the thing that you do? Because if you talk about equities, you can talk about already liquid, tradable assets, but I guess you focus on more private versions that you want to make liquid somehow?
Yeah, there's two approaches. One is definitely the looking at existing asset classes that don't have the liquidity that they could be having. And that's very interesting because there's two components there. One is basically looking something that is that can be brought on chain and making it more liquid, and that increases the ability to use that asset as a collateral against credit. The second aspect of it is access. So there's a lot of real world assets, or let's say like traditional assets, that investors or users around the world don't have the same access, for example. And great example is being able to invest in companies like SpaceX, Stripe, and Neuralink, and so forth. So what we're trying to do is take this technology and provide more wider access and kind of like democratize some of these illiquid assets or just like less accessible assets. And the second part is actually then also liquid assets. So things that are traded actively, but there is some sort of programmatic benefit, for example. So a good example is that treasury bills, for example, might be traded during the week, but you can access liquidity during the weekend. So you could use them as a collateral to borrow against over a weekend, and that adds more flexibility for the users.
So that's indeed where there's a limit to liquidity somehow in time, space. You could actually solve that with this. But is that actually the biggest problem that you solve then with the technology? Because in a lot of cases also it's for example about a certain scale that you need to drive liquidity. Either it's too big or too small. How do you solve that? So do you see that is there really a market for everything?
Not for everything. I think where the kind of sweet spot is basically looking inefficiencies in the traditional financial world in these different asset classes, and understanding that if you bring that asset on chain and open up to kind of like a wider markets or just kind of like a programmable infrastructure, would you actually get more economical activity onto that asset? One great example is, for example, energy infrastructure. So there is obviously energy infrastructure funds, but what tokenization allows is to focus on certain types of projects. Could be, for example, here in the Netherlands, as an example, for example, wind, solar, that could be tokenized and then making more liquid on chain and then extending capital against that asset class. And the idea there is that by this kind of like a behavior, you're able to extend more credit into the same asset class and expand the financing of these assets. So I think making liquid is one part of it, but also taking advantage of some of these inefficiencies and making it more accessible and programmable by using the blockchain and decentralized finance.
Yeah, and I think that's really a good benefit. I think in a lot of markets would really grow by implementing that. But one of the challenges I always see as well is that I think in the end, in a lot of financial markets, there's some kind of intermediary at least playing a role to match up, supply and demand, right? Like corporate finance advisors or merchant banks. So how do you see that role evolve as well? I think now from crypto, it always has been a really technology-driven market. But in the end, I think it's really to be able to find the buyers for any kind of liquidity that you create. You might actually need to revert to more traditional players as well. How do you see that interaction?
I think in overall, the technology doesn't replace the existing market participants. It just creates them another type of a venue, I would say. I think blockchain or decentralized finance is a new type of a medium for financial transactions. So the same way as we went from writing transactions into clayboards, then later into paper, and then into digital, and now more into blockchain. Every single medium creates additional properties that can add benefits. And what we use a lot is so-called smart contracts. So that allows transactioning without intermediaries. But actually, that just creates a little bit more security on transactions and predictability. So we can understand what the smart contract can and cannot do once it's coded and deployed into the blockchain. So the traditional market participants will simply participate and be the agents as well in this ecosystem and have kind of like a more transparent environment and more programmable environment to interact. So they're definitely not going anywhere.
Yeah, but do you see the uptake there? So do you see that they're open to work with these kind of solutions at the moment? Or is it still, because I think the market is still fairly small compared to traditional asset classes? Yeah,
very small. I think decentralized finance itself is the size of hundreds, maybe 20 billion. Aave as a protocol has significant market value of that, but we see more asset managers entering into the space, such as BlackRock, tokenizing, treasury bill funds, money market funds, and some other participants. So there is a big uptick there, but at end of the day, there is still, finance is such a big space, and DeFi and real world asset is small drop in the ocean, so it will take a lot of time. And also, I do think that DeFi will be the venue of getting the best financial opportunities, because you have this kind of an environment of algorithms that are codified, that compete for the liquidity. And RWAs is a way to bring value from the traditional world, the same way as we were putting value into databases. This is about putting value into the blockchain, and stablecoins are actually a way then to consume that value. So using something as a collateral and borrowing against, or supply, or basically getting yield against. So I think those things, RWAs, DeFi, stablecoins are important, and I think stablecoins will overgrow the native kind of a crypto assets that we know as of today, and tokenization with RWAs will overgrow these both categories. So we will see more and more securities being issued directly on the blockchain.
Would you expect in the end all infrastructure to be replaced by this? Because I think there's a lot of benefits in the end, right, with real-time settlement, and basically skipping a couple of layers in the value chain as well to enable trade. So I think in the end, all assets would benefit from this system rather than the traditional one.
Depends on the assets. Obviously, there's still financial transactions that are very convenient to do just on a paper agreements, and it's still happening in traditional finance, even though the the technology has been available to do digital transactions. So necessarily you don't need it everywhere, but where you actually need some sort of additional security that comes from blockchain, and you have like a wider group of agents where you want to verify the rules of transactioning, then it really works pretty well. So I think real world assets is interesting. Payment systems might be also interesting use case as well, for sure.
And so also there, I think one of the challenges, you say that the advantage of the blockchain is really it's really beneficial on a technological level. I think how do you see the legal framework evolve around it? We see increasingly legislation popping up, of course, with MiCA in Europe, and also in the US. There's now a couple of bills in the making, and across the world. So it's getting into a more regulated field that should enable more security of the system as well, and compliance with sort of more standard financial regulations. But one of the challenges, of course, is always sort of the agency responsibility perspective. So who in the end is responsible for anything that potentially goes wrong in these systems? How do you see that evolve? Do you see that have we been able to solve that issue just yet? So, because we tend to really like to have someone who's responsible for all the services that we use.
Yeah, that's fair. I think there's certain benefits that, for example, decentralized finance by design solves. So, for example, the challenge of custody, giving assets to a custody. So you don't necessarily need that anymore, because you can codify these smart contracts and program them in a way where there's no really an entity that is taking over the funds. So certain action happens regardless if certain function is called in the code base, and that's basically guaranteed. But at the same time, it introduces new kind of challenges. For example, you have so-called smart contract risk, or like the risk of the code base. What if there is some sort of an issue? Then if you have users that are self-custodying their funds, how can they do that safely? And that also doesn't really remove the angle of having qualified custodians providing this as a service. So I think that decentralized finance and blockchain, they will be the technology, but then you still have these service providers and businesses that are actually then providing regulated services. So I think in terms of MiCA has been early adopters in the regulation, and has been already regulating the space across. There's also regulation now coming up next year as well in the UK, and obviously in US there's also stablecoins that has been two stablecoins bills that have been progressing, and one of them actually getting more traction. So I think in overall, like, we will see a lot of regulation and kind of like a clarity of how you use the technology, but also regulating the actually service providers that are providing services, not necessarily the technology itself.
No, exactly. I think this is also what we've seen over the past. So the gateways that actually give you access to the technology, they're the ones that become responsible for anti-money laundering, KYC, kind of processes. So I think that's a really, really good step, I think, in that direction. So also to help it become mainstream, and I think it could really benefit a lot of markets to provide liquidity. So yeah, I'm definitely in favor of actually seeing how we can progress that forward. And so hopefully these bills and legislation also help with that. Yeah,
and it's the space is very small, but it's been existing here for quite a while. I've been building myself decentralized finance for the past 7 years. So it's actually quite nice to see that there's now actually interest on figuring out like how this technology and these type of services actually fit into the whole kind of like a financial system. So, and that then creates additional tailwind for institutions to actually then integrate the technology and also create services around it as well. Yeah. So, and I think, let's say, one of the killer users for crypto these days, I think, is the stablecoin, and I think it's becoming really popular. We see a lot of euro coins in all kinds of varieties popping up. We've been very dependent on US stablecoins for a very long time, which indeed, fortunately, also getting into more regulated territory, which I think is also a good idea. How do you see the evolution of that? So I think, can we already oversee sort of how we are going to actually use stablecoins in the future, and what kind of use cases and business cases are behind it? Yeah, a lot of kind of like a narrative goes in stablecoins in the fact of like stability and being able to provide some sort of stable value in economies where you have instability, like Argentina, some of the countries in Africa and also in Asia. So I think from the Western world perspective and our like European mindset. So I come from Finland, and live in UK at the moment. So like stablecoin necessarily don't provide me direct value when you think about stability, especially if they're USD based. But one use case I think is very significant is that when we have decentralized finance, which is this incredible programmable financial environment where you can deploy protocols and they have different type of functions and they're trying to capture yield and so forth. Stablecoins are kind of like the only vehicle how you can access to borrowing against those different types of assets, whether they're crypto native assets or RWAs down the line, and also earning yield from decentralized finance, because you need something that is in dollar value stable and on the blockchain, and then you can actually consume and extract that yield opportunity. So I think that's going to be kind of like the big thing. So there's a lot of stable coins, and I do think that there's some sort of economies of scale going to apply, and maybe there's a few big ones. But I would like to see more of like a local stable coins. There's now Circle has EuroC that has been very popular, also in Aave, and a few other ones. So I think it's an interesting development now.
So wouldn't you also think that, for example, multi-asset stablecoins would actually become a favorable hedge against all kinds of fluctuations of currencies, for example? Because now we still see indeed USD or euro related, but you could actually do like BIS drawing rights.
You can do all kinds of magic.
Stablecoins. Yeah, exactly.
I think it's an interesting concept, and I think partially or mainly the MiCA regulation in Europe was specifically tailored towards the Libra stablecoin that was some sort of a basket and didn't go through back in those days where it was very early. But I personally think that it could be interesting, a way of like packaging like purchasing power or like economic value of multiple nations, which could make sense. But I'm very like skeptical if it provides an actual then use case. I think maybe like for store of value, but you have to have such a large consensus of different countries and market participants to start using something like that. I don't know where they will go for, but I will be open to look for any kind of innovation in that category. Also
interesting, I find in that sense, for example, is a gold stablecoin, right?
Yes.
Back to the Bretton Woods perspective.
That I like, yeah. That's how we favored.
Yeah. I'm also curious whether that will get a big update. I think gold still has a lot of magic around it.
I think so. And I think especially backing a specific currency with gold will be quite interesting as well.
Yeah. So one of the challenges I see is this. I think, let's say, I'm very much in favor of creating a lot of liquidity and making sure everybody has access to both investment perspective as well as the availability of credit. But then again, if we make everything very liquid, there's also a risk of over-crediting, right? We create much more money in the world than it currently has. I think this is beyond the scope of currently the control of central banks. Yeah. This is also, I think, one of their big worries. How do you see that evolve? How can we keep control over the money supply and actually understand how these assets are potentially inflationary, deflationary, and sort of manage the economy as a whole and the means we use to supply it?
Yeah, that's a interesting point. I think one really important thing is to understand kind of like having the visibility on money supply and credit supply, and I think that's where I think the idea of decentralized finance, one of the kind of like principles is transparency. So a lot of decentralized finance evolved in the world of kind of like open blockchains, wherein previously a lot of kind of like institutional use cases were done like more on a private blockchain. So that has been interesting development, and what it actually means is that you can audit every single transaction at every single state, and a state can be, for example, in Ethereum, it can be 12 seconds. In some networks that are built on top of Ethereum can be 1 second. And you can see all the kind of liquidity in decentralized exchanges or the lending and borrowing happening in lending protocols like Aave. So for me, it's a really interesting way of quantifying the end-to-end kind of like a systemic risk even though it's a very tiny scale. And then with real world assets, things like proof of reserves, where you have ability to actually pull in the data of these reserves and ensure that they're fully backed is another point. So I think if we kind of like rebuild, if I would have like a magic wand and we can rebuild the whole financial system, building it on a transparent blockchain will be like the most ideal for transparent markets, but also understanding the systemic risk. And if we understand the systemic risk better, what it means is that we can actually price the risk accordingly, and that should mean that cost will go down. And obviously, like, this was the vision, but getting there will for sure take a few decades from here.
Yeah, and of course, one of the challenges we have there is that we work in a multi-jurisdiction world where a lot of politicians don't necessarily agree with their neighbors on how things should be done. And that's one of the challenges if you talk about global solutions, which with blockchain generally you talk about, how do you actually govern that if you all argue who's in charge?
Yeah, governance is the most difficult kind of like part of it. And I can't remember, was it Winston Churchill who said that the democracy is the best of the worst. So it's really hard to, even in like a blockchain world, Aave as a protocol has 43 billion worth of net deposits. It's fully governed by a decentralized organization. So there is dedicated risk service providers, and all these risk parameters asset listings are done completely publicly in a governance forum, which sounds very funny from like thinking from like how it's done in traditional world. But there's overall in governance, it's really challenging because you have to come up and reach consensus, and in most cases that's actually really hard to do and slows things down. So I think that's even bigger problem than the solving these financial challenges that we have at the moment.
Yeah, no, I agree. I think already in traditional finance we see how hard it is to actually create a unified market. And then especially in this new field, I think everyone's struggling a bit with it. But do you see that is the technology already there to keep a good overview of, let's say, because all these blockchains might be transparent, but can you actually still monitor them on an aggregated level in such a way that you actually have a sense of the complete risk that might be included or the liquidity that's being provided? Is that already feasible?
Yeah, 100%. So that's purely about how you interpret the data that you get access to the data. So that's the beauty of these open blockchains, public blockchains, is that everyone has the same access to the data and democratic access to compute.
But would you then, for example, suggest that we should have like a central registry of these blockchains to at least understand which ones there are?
Yeah,
because that's, I think, the tricky part, right? It's not to say about if you know where one is, you can monitor it. But if you don't, you don't have a clue.
Most likely, if there is some sort of economical activity, you can get the endpoints of blockchain, and then you can track it. And also, all this the traceability of blockchain is really good. So you can trace every single transaction, and typically they lead to like service providers, like bigger centralized exchanges, for example. So the auditability and following transactions on the blockchain is really good. Obviously, that possesses another complicated topic of privacy. So we still need to figure out how do we create kind of like a consumer level privacy, but still retain public and transparent markets.
Yeah, no, true. Well, enough about regulations. So what is the project that you're working on that you're most excited about now? So what do you see as a use case, business case of something that you say like, okay, I'm really excited about, we're trying this or building this or launching this somewhere soon?
Yeah, I mean, it's been kind of like a ride to build so far, and now I'm most interested actually thinking about how to take Aave and decentralized finance into kind of new audiences. So that's basically audiences that are looking for yield opportunities or basically also collateralizing traditional assets in form of RWAs and borrowing stable coins and then converting that into traditional currencies to finance different types of goals. So pushing more decentralized finance into mainstream finance and kind of like a one case by case. And this boils down to what we discussed previously. We have to see some sort of value for the users. So yield is obviously one interesting thing, especially as central bank rates are going to go down. But then being able to collateralize some of these traditional assets like green energy is very interesting, and being able to extend capital for that is very interesting.
And what kind of partners are you then looking for to collaborate with if you want to bring this more mainstream? Is it like banks or specific agencies that could play a role here?
Yeah, it's either asset managers on the yield side and also on the RWA side for tokenization, and then it's also fintechs. Fintechs are looking more closely into decentralized finance and seeing it as an opportunity, and Aave is a leader in the market, so that's one kind of like a low-hanging fruit. There's still kind of like open questions that needs to be answered, but we're getting in a much interesting place now. Yeah,
cool. And so outside of finance, you're probably also doing interesting stuff rather than just doing the hard work behind these financial products. Any fun things you're working on like that?
No, I think everything goes into the company at the moment. But also, I'm a big fan of saunas. I coming from Finland, that's a big thing for me.
What do you miss the most from Finland, being in the UK?
Yeah, definitely saunas. That's a big thing for me. And I like outdoors and sports, and that's my kind of like a cup of tea.
Great. Well, I can imagine that it's actually really nice to do that, especially in Finland, because there's a lot of outdoors there that you can enjoy without a lot of human interference.
Yeah, especially if it's not in the winter when it's too cold.
Yeah. Great. So I think, Stani, I was really happy to have you here on the show. Any last things you want to mention for people that want to reach out to you or work with you? Any last call to action?
Yeah, I mean, if anyone wants to reach out, I'm Stani Kulechov in X, so that's a nice way to actually drop me a DM if you're in the space or looking to do something in DeFi as an institution or as a fintech. So that will be my kind of call to action.
Great. Well, thanks a lot for sharing your vision here on the show. For all your listeners here, thank you very much for joining here on this wonderful conversation about DeFi, real-world assets, stablecoins, and everything else. I really hope you enjoyed the show. My name is Don Ginsel. This was Breaking Banks Europe at Money2020, and I'm looking forward to listen to you again soon.
Thank you so much.
Thanks.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with FinTech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.